Hey, it's Justin Harvey. Thanks for tuning into the Anesthesia and Pain Management Success podcast. With APM Success, we take a close look at important topics pertaining to business, practice management, personal finance, and careers for anesthesiologists and pain management physicians. We work hard to take your critical questions straight to the experts. Thanks for listening. Hello and welcome to Anesthesia and Pain Management Success. Very pleased to be joined by now friend of the show, Dr. Zwade Marshall. Dr. Marshall joined us way back in like the 33rd or 35th episode years ago now. And I'm very pleased to be having him here again today to talk about the continuation of his journey as an anesthesia pain boarded practice launcher, private practitioner who has seen the ups and downs, the trials and travails of business ownership. Zwade, thanks for being here.
Justin, it's my pleasure to be here with you. And I know that this is maybe episode 280 for you. So to be in the 30s as a guest then and to see the growth of this podcasting platform, it's truly one that I think our community of anesthesia and pain docs value immensely. I still meet folks that say I heard you on Justin Harvey's show, and so it's a privilege to be here. And I hope that my peer group find what I say to be compelling.
Awesome. So when we last talked, you were sort of just in the foundational stages of launching your practice in the Atlanta area. So why don't you bring us up to speed? What does your practice look like now and the scope of your professional and clinical responsibilities, and what kinds of things are on your mind right now as a business owner?
Sure. So I'm quite happy with how things have progressed over the course of the last 4 years. We now have a 3 location footprint. So I am south of Atlanta proper, in Atlanta proper, and then north of Atlanta proper. So it's a spoken wheel concept where I want to be able to kind of capture as much of the Atlanta market share as possible, while benefiting from those suburban communities that are not very competitive from other pain docs with my credentials, but are urban enough to have a high density of patients and a good payer mix, because I was chasing blue sky payer mix. The more commercial payers they are, the better it is for my collections and reimbursement. And so it was a thoughtful strategy around where I wanted to be. Of those 3 locations, though, I now own 2 surgery centers. The second one is going to open doors in about 6 weeks. So I'm in the painful part of that process. I just passed my Joint Commission inspection. It's really AAA for the ASC, and so I'm celebrating with my practice admin who led that initiative. Uh,
Congratulations. That's a big one.
Thank you. And I'm writing the big checks to contractors. These are the milestone payments, right? So the
Yeah.
last check I wrote was for $274,000. So it's painful, but you take pride in seeing the studs, the frames become walls, become design. You see the OR look like an OR, and the HVAC, the ductwork get covered up, and it begins to look like something that you can be proud of. And I'm nearing the end of the light at the end of the tunnel, so it's beginning to feel like something that's going to work out.
The expansion journey is always interesting to me because there's so much. You could basically spend an endless amount of time and money hiring consultants, doing analysis to say like what does the next footprint outside of the spoke or so, outside of the hub as you're
Yeah,
doing the spokes, what does
yeah.
that look like? And so tell us a little bit about that process as you've got one location and one surgery center and things are building momentum and you're gaining sort of economic steam, and then you want to take that next step out there. What were the questions you were asking as far as determining where do we want to expand our footprint?
So I talk to quite a few peers that will reach out to me because they're either borrowing money from doc-to-doc lending, or they know that I'm now in my 3rd location and they want to get some guidance on how to think about expansion. And the question you asked is a phenomenal one. It's a challenging one for people to contemplate. I am not the same person I was 4 years ago when I opened the first center, in the sense that when the first one for me was my baby. I spent all of my waking hours looking over the plans, doing the design plans with the architect and the contractors. I was on site walking the space each week with them, and I knew everything about everything then. Now I'm busy in the OR. I'm busy seeing patients. I'm running a business and I'm expanding into another one. And so a lot of this I've outsourced to consultants and project managers and contractors that see me once a month, maybe. And really, it's just a team around me having these now weekly virtual meetings where I just kind of want to get the highlights. If there's going to be a change order request of us exceeding $5,000, I want to know. If it's less than five, I don't. Like, figure it out, let me know afterwards. What I think a lot of docs will cringe when they hear that because you think there's so much savings when you're involved yourself personally. And I have to tell my peers a lot, like there are people that are as good at project management, at value engineering, at building these ASCs as we are at doing medicine. And my time that I would be spending crunching that spreadsheet for an hour and a half is time poorly spent if I can be in the OR doing 5 cases, 5 RFAs, and getting and billing $15,000. So letting go of the reins was hard initially, but the time that I saved myself and my ability to kind of keep earning while I grow was one of the big things. I think also when to expand is a key question. When do you have enough of a patient load in your first location? And second, to say a third one makes sense because you can quickly become over leveraged where you're chasing growth and you end up investing and redeploying capital that you could have taken off the table and put into some investment vehicle that's diversified, but you're putting more into this primary business that, of course, you believe in it because you're the doctor, but this is your second or third one, and number one and two may not yet be at the point that can survive your change, your lack of focus or attention on those two. And so what I say is that once an ASC becomes about 85% capacity, where you're filling the slots at 85% of the time, it's time for a second one. If you're not near there, it's hard to justify. To me, you're better off spending the money to market and get and fill that first one or second one before you do the third. And it's easier to get financing for the third when you're making sufficient EBITDA to redeploy into the growth of the new facility. And so I did not take my own advice. I opened the third one sooner than I should have. Because I felt like there's some marketplace changes to multiples of exit, and I intend to exit in the future. And I needed to have a multi-location footprint to be an attractive acquisition target to someone later on. And I invested in it anyway. I wasn't ready, but not knowing that I was going in early meant that I was a little bit more aggressive around nurturing more partnerships, nurturing referral leads, doing more businesses that I didn't do before, like personal injury. In Georgia, there's a huge tort reform law, and I avoided PI. And many of us that are on this that hear this would say, like PI is where the bottom feeders go. Like if you're a credible doctor that's well trained, you don't deal with car accidents and the ambulance chasers. And there's still credible PI work to be done. There are folks that really get hurt by commercial injuries. If you get hit by an Uber, right, they've got $1 million policy, and you need to have a good doctor with good medical necessity criteria to really make that case valuable and really take care of that patient. So I'm more aggressive about finding those other referral streams, knowing that I'm growing prematurely to ensure that I fill those slots with new patients.
You mentioned a couple times building a professional team and trusting experts, and I'm a big believer in that. It's also sort of a two-edged sword because when you do delegate, inevitably, as you're trusting other people, you're going to find people that either you trusted them and they didn't warrant it, or perhaps they're still in like a probationary period, and it turns out that you need somebody else in that seat on your bus. So, can you talk a little bit about some of the seats on your proverbial bus and any experiences you had in terms of gradually trusting and delegating, and any times you perhaps had to make a change?
Yeah. So the team building part of any company, I think for medicine or for auto manufacturers, doesn't matter. Getting the right butt in the right seat and having the expectations be pretty clear about what you expect is key to anything. But I'll tell you that when I did the first ASC, the credentialing process, I think you always want to have a role as a doctor. As the negotiations get to final form, you want to speak to the Blue Cross Blue Shield, the Cigna rep, so they hear from you, and so you can really get an appreciation for exactly what you're going to get reimbursed for that epidural that you're going to do. you don't want to delegate all of that. But there's so much paperwork and back and forth and kind of like just busy work that needs to be done before you get to that point. The crosswalk between a payer's 50,000 CPT codes and the 30 that matter to you. That's key to my negotiation tactic. I'm like, look, I will take whatever you'll give me. 50% of Medicare on the 49,580 codes. But these 30 right here, give me 200% of Medicare. I only care about these 30, right? Figuring out where you care and where you don't. I hired a credentialing specialist for this. And I found her to be competent. She can speak, she was convert, she can speak the language. And most consultants will come in with the language down
Mm-hmm.
pat. That's how they get their hooks in, right? They'll say the right words, they'll talk about, they know all the vernacular for the buzzwords for whatever the industry is. And I'm like, okay, this feels right. And as you begin to kind of get into the detail with them around the actual credentialing process and the strategy around the negotiations, you'll see some gaps where they don't quite understand that I have an ASC, so there's a facility fee and a pro fee. I care about both. Oh, I have a lab as well, so I need those lab codes to also come in place. And the more times I have to correct someone's mental model, the more I panic. Like, are you the right person? Right? And so I don't enjoy when I'm having to prove someone wrong who's a paid professional, and I don't enjoy being right. Like if they say something, I'm like, is that correct? And I'm like, I have to go like look it up. I'm hoping they're right because I feel sorry for what's going to happen to their credibility with me if I'm right. And what I found though is oftentimes with the right people, the time you spend educating them to your expectations and fact finding together makes them better equipped for the next stage. And starting over with someone new later and having similar problems or different problems is oftentimes not worth it. So I've made the decision to invest in people where I'll be right. And instead of doing the, why do you not know this? I'm paying you too much, you not know this. It's here is why this is important to a practice like mine. And wherever you worked with before, this is how I'm different. And if you give them enough grace and they're the right kind of personality, they'll accept the grace with a level of humility. And so they don't speak as definitively in the future about things that they think they know. And now they definitely know more about you, the practice, and the process. And now on my third ASC, I can tell you that I've been able to outsource credentialing until the very last mile where I come in and say, okay, let's talk to them about these rates, knowing that she knows exactly what I care. And we'll even laugh and she'll joke, guess what, doc? I got this one right. Remember the last time? And it's a chuckle because she remembers the pain of getting it wrong the time before.
And that's the thing about conscientious professionals. And I can speak to this from the professional side. Is I actually had a client who we had a meeting and a conversation, and my client was kind enough to bring to me an observation, and it was about like negotiations. And I thought what I was doing was speaking objectively about the data in their circumstances, and the way that that was interpreted by my client was they felt attacked and demeaned
Hmm,
because I was talking about, oh, how we could have done this better or different, like, if we had to do this again.
sure.
And they said, hey, Justin, like, you did this and you made me feel bad about myself. And I'm wondering, like, if this is even a fit. And I was immediately, like, I saw what they were talking about, and they were very gracious in the circumstance, and we were able to sort of mend the fence. But now I am benefiting. Frankly, all my clients are benefiting from me, like, being
Sure.
much more empathetic, much
Sure.
more like, let's think about, sure, there's the objective numbers and the benchmarking, and oh, here's what we can expect for a signing bonus, and but communicating with kindness whenever people's efforts, their best efforts, are involved in whatever deal they got. I'm very grateful actually for being on the receiving end of that, and I can imagine that as you provide that kind of gracious feedback, it does is the rising tide that raises all the professional ships in your
That's
orbit.
right. That's right. And thanks for sharing that. I think few of us admit to getting the feedback that makes us change or rethink how we said or did something. I do believe that many times it won't work. It can fracture an entire professional dynamic. But the times when it does, and both parties are willing to kind of get through that hardship together, you come out of it so much stronger with so much trust and faith in the other person. And getting through a difficult conversation on the other side is a beautiful thing for professional trust. And so I want to be able to, I want to know that I can be critical of my peer, my consultant, my contract, whoever it is, and have them not be so offended that it fractures how we work, but they know that there's an expectation here of a standard or of excellence. And likewise, if I have a wrong assumption about something, they say, "Hey, doc, that's not how this is going to work. It needs to be." I speak to me as freely as you can, and trust that I'll take the content of what you're saying and not any other offense because we've got professional rapport now.
Yeah. You said something earlier about your expansion plans and how they were sort of tied to your awareness that one day I will exit. Ironically, this is true of everyone. One day they will exit. And in my observation, a very small minority of business owners actually like take that fact and do something with it. A lot of times there's like, I'll stick my head in the sand, I'll make as much money as I can for as long as I can, and then someday maybe I'll be able to monetize my efforts. But there's very little strategic thought that goes into the life cycle of your ownership and ultimately building towards the sort of monetization or whatever that sort of end point looks like for a business owner professionally. So can you talk a little bit about your journey where, you launch a thing and at the beginning it's just all, it's like a knife fight, just trying to stay alive. But
Yeah,
then eventually you're like, we're long-term thinking and we're building as if the 10 to 20 year picture of what we can be, as if that is going to be, and making
sure.
decisions accordingly. So talk about how that evolved for you.
Sure. I think I'm probably in an increasing minority that thinks of an exit in the way I'm thinking of an exit as a goal. I think because of the corporate practice of medicine, the insurance fights that we have, there's this kind of like there's a very negative impression of what private equity buyouts of medical practices looks like from a provider experience and what the new job will feel like if you're the one that sold, from a patient experience and what they experience from the services provided and how we deliver the care, from the impact on the healthcare marketplace and costs and profit chasing, right? And so I don't know, it's a very popular opinion to say, I want that as the outcome of the thing that I've built. But I think I've been honest with myself about what makes me happy and what this journey has meant from the time I came to this country when I was 17 years old to become a doctor and to go through medical school, residency, fellowship, early career lumps and bumps, and building my own practice. And then I'm sitting here now at 42 with two young kids and a lot of time that I've spent away from the things that give me joy to build this dream practice. That's been a dream in many ways. But when I think of the time I spend fighting insurance companies about reimbursement, the time I spend doing like cash flow management because a payer is not going to pay on time and I've got to figure out how to make it work, and I'm sphincter tight about collections if I travel on vacation. And you come back from that vacation, it's like there's no money to come in because I wasn't here doing the cases. How do you live with that stress? And my view of freedom, of happiness with all that I've done is a time in which I can spend my time the way I want to spend it and not have to think about paying bills when I'm doing the things that I enjoy. I still enjoy medicine. There's no question about it. But the way I work now is not sustainable for me going into the future. And so knowing that there's a marketplace that values my profession and my specialty very, and if you're on this in this audience, you are like me, right? This is the anesthesia success and pain management podcast, right? So folks are in my shoes. In Georgia, for instance, the multiple on EBITDA for an interventional pain practice with a surgery center is between 5.5 and 11 times EBITDA, depending upon the size. So think about that. If you're doing $5 million in profit, and you got an 8x, that's a $40 million exit. I don't know what you tell your clients, Justin, they need to retire, but 40 million, that's a lot of people retire. A million ain't what it used to be, right? But when it's 40, when it's even 20, when it's 15. And so, and what exit means to me is not I sell and I go off into the sunset. I'll sell and work 2 days a week. I'll work 3 days a week, one in the OR, where I get to do things that I love to do. And so knowing that the rules of engagement are you need to have a surgery center. You need to have stable cash flows that are reliable and not based upon unicorn payments. So managing how much of the personal injury big payments you get, that's not going to be helpful for a transaction later on. Knowing that you need to be vertically integrated as best as you can. So having your own platform of a lab, of a surgery center, of a clinic, of DME, of all the things that you can construct internally with the right kind of tax base and structure where you know where to draw dividends from, where to do management fees from. So it all helps your overall bottom line tax liability at the end of the year is a thoughtful way of building a business to make it easy for big paying group or private equity guys to come in and say, hey, Zwade, we'll buy RSPS at whatever multiple. We'll buy 65% first. You have to roll the remaining 35% into new co and possibly transact that 5 years later. But I get some kind of a check today that allows me to kind of breathe easier and not think about having to pay bills the way I do right now. It's the goal for me. And there's many reasonable, thoughtful people that'll say no, that's a sellout. You should continue to kind of grind and do it the right way and spend the time in the room and fight the insurance fight. But I can feel myself getting tired.
If you had to narrow it down to one or two key practices or mindsets that you think would differentiate you in this sort of what I'll call long-term thinking from somebody who's more, in the day-to-day and less long-term viewing, what would you say those things are?
So I think although I've been the one, I've been the doctor, but I've had a small team with me doing all the kind of work, the lumps and taking the lumps and bumps of the work of building this thing. I don't feel like that first mover advantage, me being the first doctor here, means that I'm entitled to take advantage of the first person I hire, right? I think a lot of doctors are very protective of those profits. And having a new partner join who's ambitious and talented and wants to feel the upside of their presence in a new practice, withholding the ability for them to become a partner in there for too long can engender some bad feelings and some bad will where in the short term, you get a worker for you, but you don't get a true partner that helps you grow that business for that next transaction. So I think I am very open-minded to assessing talent and structuring comp to allow that tide to rise so that all
Mm-hmm.
ships can as well. Because for me, dilution is good if it's accretive, right? I'm happy to give up a piece of the pie if we grow that pie together. What's not fair is if I'm giving you a piece of my pie and that pie stays the same and I've just given up some bread off of my table. And the right docs, the right transparency in terms of compensation can help that pie grow. And I can be benevolent and be fair about sharing profits. And so I think that's a little bit different because I talk to peers who are struggling with hires, and you can feel them want to withhold. Like, why should I make them partner and give them a share of the ASC? Like they've only been here for 18 months. Like, yeah, 18 months, they've grown that EBITDA, that ASC by about $500,000, and that multiple in that EBITDA they grew. You're pricing their buying based on that. So it's only fair that they get something of it. And so I think there's that. The other thing I think is because I've had some success now for about 8 years, I'm not making money decisions. What do I mean by that? I don't have to chase every dollar in a way that when I was in the weeds and concerned about making payroll and those things, every dollar that I had to make a lot of short-term decisions to ensure that I paid the bills. Whereas now I can take a step back and think more globally about the business, invest in my own anesthesia company for my surgery center, even though at early case volumes, that's a loss leader business,
Mm-hmm.
right? I'd have to pay an external company to come in and I'll be losing money to them anyway because I don't have enough case volumes. I'll have to subsidize anesthesia there, or I can have my own, eat the losses in the short term, but grow into it as I have a 3 location practice and I'm having my anesthesia company go to other locations. So I can withstand the short-term pain of a company investment that's going to pay dividends later but most importantly, raise enterprise value for what I've created. So now my enterprise has a number of different entities generating revenue at different EBITDAs, with me taking dividends or distributions in different ways that are tax advantageous to me. That's helpful for the overall enterprise.
You know better than most people that in order for a pain doc to sort of make it out there in the wild, if you're only running an office based practice with no other related businesses, it's basically impossible. And you're that penguin on the shrinking iceberg where
That's
every
right.
year Medicare cuts and the
That's right.
downstream commercial cuts just will bleed you dry. So you mentioned a few things: lab, ASC, anesthesia, DME. Why don't you pick one of these and sort of give us your journey of analyzing that ancillary line, vetting it, structuring it, who's involved, what kinds of decisions or capital was required, and then how did the rollout of that go?
Sure. So I'll go with anesthesia. Many of your docs are probably anesthesia. Like they probably know this well. Let's go with lab. I think more of us that own pain practices are probably sending out labs when you're small, and the decision to bring it in-house is one that requires careful contemplation. So let me talk about the lab first. My lab journey was a little unique because when we met several years ago, I had just bought and built out a lab for COVID. So I had PCR machines, and that was that was my first taste of real success. And it's crazy to say that a global pandemic created success in my business. Like I made my first $1 million doing a COVID lab, and I was able to transform that lab after COVID ended into a urine drug testing lab that served my patients because at that time I was still a new practice with not enough patient load to really launch a successful urine drug testing lab. I did initially the pro form, and this is what everyone should do. As you're considering a new service line, you've got to model it out. All right. Look at your fee schedule and contracts for the CPT codes you're going to bill from that new service line, whether it's DME, anesthesia, or lab in this instance. Know what the codes are. Know how many patients you have and on what frequency do you do the lab testing. And most importantly, speak to a regulatory compliance attorney to understand what frequency gets the radar for investigations of fraud and abuse and ensure that you're well beneath that frequency and you have a thoughtful lab testing protocols with the right risk-based studies to fit. You layer on those layers onto your pro forma to see if I see 200 patients a month. Of that 200 patients, 50 are considered to be high risk. I'll get a lab test every month. 75 are low risk. I'll get a lab test once a quarter. And 100 of them are moderate risk. I'll get a lab test every 3 months. How many labs am I ordering? And what is my average reimbursement per lab? If that math says that for me, I want to have a return on investment within 15 months. Most people say 2 years, but I think I want to be more aggressive. Then it was worthwhile for me to deploy the $280,000 to buy that LCMS machine, the 75,000 to hire that lab pathologist who's going to be the medical director of the lab to study it. Big expense on a lab today is the servicing contract. If that lab goes down, you're going to lose tens of thousands of dollars. So you want to have a quick reaction team
Mm.
that comes out to your location within 48 hours if there's any lab issue, or that can remotely study the lab elements in your machines and repair it remotely. Those contracts are in the scale of 40,000 bucks per year. So layering on all the math of what the costs are to run this thing efficiently, and then getting a pro form that says on a monthly cadence, I'll make 23,000 bucks in this lab, which gets me to a place of netting 8,000 bucks a month. It's a no-brainer. Or break even initially, but the business is growing, so I'll grow into profit in the near term. That's the kind of structure of how I thought about it. Once I decided that I was going to do it, I figured, okay, can I just buy the equipment and launch it myself, or do I hire a company that does this for other practices that comes with a compliance infrastructure? I'm relatively conservative. Like for as hard as we all work in pain management, the last thing I want to do is make a mistake that gets me in some ambitious district attorney's radar. So so I decided to hire a lab management company that got me the machine, got me the pathologist, got me the supply chain of supplies, and they run the lab. I didn't have the time to spend building the lab myself and putting the pieces together. And I pay them a management fee, and then I get the spoils after that fee. But I sleep well knowing the protocols are right, the professionals are handling the daily lab bits, and that's one of the things where I think I trust professionals in a way that a lot of my peers would say, you can have gotten that device for 30,000 bucks cheaper. You're paying them a management fee of 7% a month. You could keep that money for yourself. I don't want the money if I have to have the headache too.
Yeah.
I'd much rather pay for the lack of problems. And so that was the genesis of it. And now with the additional locations added on, every incremental lab test going through there is adding to my contribution margin of profit because I've made a basis, a foundation of ancillary services that just continues to grow into profitability as the business grows.
That time to break even calculation on the pro forma is a really valuable, it's a simple idea. And there's a couple ways it can be expressed, but one is like, how long does it take until this thing is no longer bleeding and
Yeah,
is at least covering monthly costs? And so as you're building a financial model, if you're a doctor working with your accountant, financial advisor, whoever's on your team, being able to figure out that time frame is going to then show you what are the important variables. Like we got to boost volume, we got to keep expenses reasonable, and we got to what it shows you what you need to push on, and it gives you that mission clarity. When there's a lot of noise, a lot of things going on, and compliance concerns, it can be a moment of like, well, now I know what I need to do. And there's a saying in finance, like sometimes there's one number, and if there's one number we focus on and that number moves in the right direction, then we can
sure,
do a lot of things wrong. But as long
sure,
as new patient volume is, whatever percent growth month over month, like literally all the other problems are going to solve themselves.
correct.
Identifying that kind of variable in any new initiative, certainly in a lab setting, can be a really valuable exercise.
Absolutely. And you'll learn a lot from just the modeling, right? Because there's so much that goes into a well-constructed model that it may I've decided not to do things after the pro forma came back, and it's like I just can't make this work. Not right now. This is going to be maybe later or maybe never because of how the model worked out. For me, DME, that was DME for me. I just couldn't make DME. Um, uh, I'm not. I think the days of getting paid a ton of money for a back brace or a wrist brace, I don't believe in DME that much, to be honest. I think people overuse the devices and end up getting atrophy of muscles and joints and ligaments. And so it's not a robust part of my medical recommendation plan. So having a business that relies upon me recommending something that I don't believe in a lot is like, and I got to prescribe 80 of them a month for this thing to make sense. And I'm like, I'm not going to find 80 patients that need this. And I don't want to be thinking about, I have the thing on the shelf. So now I got to give it to someone who I don't believe needs it. So I don't want to practice that way.
The last thing that I think is one of those Rubicons to cross that a lot of docs kind of get up to the line and I see step back is that hiring an associate. So it's one thing to like, we're bringing on an MA, even an NP or PA, but like, I'm going to add headcount that's going to cost me $300,000 or more
Yeah.
before they're doing anything for me. That is a big investment. And it's not even just the money, although certainly it is money, but it's the time that it takes to train, get them like, integrated into your workflows. There's so much that goes into that. So talk about your sort of thinking in terms of that part of the journey.
So this could be its own hour podcast.
Yeah, it probably should.
I think, and I know that we all struggle with it, right? And I don't have the secret sauce. I think I've gotten extraordinarily lucky with the first hire like that I made. I'll tell you that there's a number of things that you highlighted there that I think are worth noting. It's a lot of money investment to pay someone a mid six-figure salary. Have them be if they're well trained, talented, all the reasons why you want to hire them is all the more reason why they're going to demand a lot of money because they're going to be adding value, but not in the immediate term. It's a future investment that you got to feel really good about. But then there's other dynamics as well. I'm in a different generation from my hire. We just view things. I think the current graduating generation out of training has a different life philosophy than I do. I think And it's neither good nor bad. We're just different. There's a lot more of a focus on lifestyle and the things that matter to that's valued. And I've seen this as a theme amongst I've interviewed a half a dozen candidates for the job, and they all were very much interested in knowing exactly like what what time off looks like. What are the requirements in office? Are there any admin days? You know, like what is marketing? It's just a lot of talk about the things that impact life. Whereas at my time, tell me the rules to hit the metrics to become a partner. And vacation, that's great. But let me decide when I'm going to forfeit vacation to hit these numbers because I know I want to get to there quickly, right? So there's that. But I'll say that I heavily rely upon recommendations from people I trust for folks that are looking for jobs. I've not used a recruiter or put a public posting out for a job as important as my first associate in my practice. You got to know someone that I know that and trust because I'm relying upon that relationship as well to make you deal with me with a level of honesty and integrity because of our mutual network. I think you add that layer is protective of both them and me. Because I also want to protect my brand and how the person that referred this person to me feels about me when it's all said and done. I cannot be disrespectful in my tone. I can't negotiate in bad faith. It's got to be fear. So know that. But I found it to be off-putting for a number of candidates where they were very interested in understanding how many shares they were going to get on day one, even. Expectation of profit sharing on day one, which lets me know there's an ignorance. It's either ignorance or arrogance, Justin.
Yeah.
If you can demand a share of the pie without having added value to that pie, either you don't know what needs to be understood here, or you know it and you just think that you're arrogant enough to think you deserve it. And either one's a problem for me. In my case, I got a recommendation from my training program, people that I love and trust that have been in, some have been in your podcast as guests, said, we've got a star coming out of our program and she wants to come to Atlanta. And you guys should talk. I wasn't ready to hire someone at the time. I didn't have the money to afford the north of 350 salary. But I met with her out of respect for my mentors. And I got at least had the conversation. And immediately she was outstanding, conscientious, smart, clearly a leader. In the interview process, I flew her down. Oh, I think you should always do this as well. Bring have the virtual discussions, but pay the $400 for the flight to meet in person. Do the dinner the night before, and have them come in and meet your team. See how they interact with your nursing staff, with your MAs. Have them see what a day in the life of looks like. Because when you're in training, and mine was a new grad, so I think new grads and established doctors are a little bit different to recruit, different kind of sensitivities. But in this case, I wanted her to see what a private practice surgery center looks like and what it feels like from a flow, from a pace, and see if it was intimidating to her, if she felt comfortable in that setting. And I remember her being extraordinarily polite to everyone, very courteous as you expect her to be, almost a little like shy and demure. And I had her put on gloves in the OR and come in with me. And I can feel her come alive in like her happy place. And you saw like the blossoming of a flower, right? Because clearly this is her sweet spot. And so I made the offer, made the hire. It was a very pleasant negotiation. It's okay to ask for more. It's okay to negotiate and have difficult conversations. But the tone always felt to me like she understood where I was coming from and what I was concerned about, and I understood where she was coming from. Oftentimes, folks anchor in these negotiations and lose sight of the fact that when this is all said and done, we're going to be married. I'm not selling you a car and disappearing into the night. Like this is a deal to get us together to work together into the future. So we've both got to feel good about it and how it's molded. And it's not a sign and a one and done. It's going to evolve over time. And so things can change. I actually accelerated her path to partnership because I was so happy with how she delivered for me and I don't want to lose her. And I wanted to make sure that no one can recruit her away from me because I'm going to give her what she wants before she tells me she wants it, right? And so there's that dynamic of making someone feel valued. I got her an EV at her 1 year anniversary, it's a car that she drives to work, that it's tax helpful for my business. She doesn't have to buy gas when she drives to our locations, but it felt like a generous gift for her. And I love that I was able to do something that she felt cared for and valued and appreciated for how she shows up at work. And in response to that, I get out of her someone who does cases for sure, but who comes to work and leads my MAs and does in services with them and opens up Excel spreadsheets to go over the numbers of new patients that went with their marketing team. Like, I don't have to be everything to everyone anymore. I don't want to be. And having a partner who can take on some of the ugly tasks that's so time consuming is worth its weight in gold. And I couldn't be any happier. Dr. Jennifer Zhang, I still love you. And I hope you never go anywhere else.
Oh, that's incredible. It's gonna be. There's a bunch of. I can sense the unsettledness in the ranks out there of all the other docs who are like, my boss didn't buy me a car. What am I doing, wasting my time here? Well, let's wrap up there, Dr. Marshall. I know we're kind of coming up on time. I really appreciate you sharing from your experience. I know our community is going to benefit a lot. Thanks for coming around again on the podcast.
Justin, you're a friend, man. I remember being an infant entrepreneur on the podcast and thinking through and talking through the challenges I had, and we've worked together since. And I love the podcast. I love what you do for our community. I think it's you're the only one like you that does this for our such a niche population of doctors that have very niche problems and challenges and successes. But it's really cool to see how your platform has grown and serves our community. And thank you for the partnership. And happy to be here with you.
Thank you. If you liked what you heard this week, head on over to apmsuccess.com, where you can find more content and free resources to help you build a successful career in anesthesia and pain management. If you wanted to leave a review in iTunes, I'd also really appreciate it. Thanks for using some of your valuable time to join me today on APM Success.